You are now dialed into Investment Research Radio. All material on this program is not to be taken as investment advice and is for informational purposes only. Investment Research Radio interviews the most exciting up-and-coming companies, as well as market commentary from leading analysts and traders. Now with your host, Ray Crowley.
Welcome to Investment Research Radio. I'm your host, Ray Crowley, and today we have Matt Simpson of Black Iron, BKI on the TSX, and thanks for coming on, Matt.
Thanks for having me on your show, Ray.
So Black Iron, it's an exploration and development iron company, and we're wondering if you could just tell us a bit about your background and history in the mining industry.
Sure. My background is, by education, I'm a chemical engineer with an MBA. I started my career at a company called Hatch, which is a global engineering consulting firm. I used to design metallurgical plants, and I did construction of plants for a few years. And then after that, I joined Rio Tinto, where I worked at the Iron Ore Company of Canada in various roles, with my last role being the general manager of the mine, where I had about 650 people that reported to me, managed about $300 million a year. So I'd like to think I have a good background to run this company because I've done the large operating role with a major being Rio Tinto, but then also have the experience designing and constructing mines.
Excellent. And as far as Black Iron's beginnings, could you just tell us about how it came to be and where you guys are doing right now?
Sure. So we acquired Black Iron's Shimanivsky project from a company called East One Group, which is a Ukrainian organization, back in late 2010. And all of the iron ore mines in the former Soviet Union, and in particular in Ukraine, were originally all started by the government. And this mine happened to be surrounded by two other operating mines. One's owned by ArcelorMittal and the other by Metinvest, which means that it has great major infrastructure being rail, port, and power. And that's what really attracted us to the property, Ray.
That's great. And so I guess you guys have had some challenges over the years with it being in Ukraine. Could you just tell us a bit about what you've been up against?
Okay. So in terms of Ukraine, I mean, the real benefits of the country is that you have a very intelligent population. It's over 99% literacy. However, the GDP per capita is only about US 2,500 per person, which means the average salary is shockingly only about $1.25 an hour. So in Ukraine, you can get skilled electricians, mechanics, welders for about $5 to $8 US an hour, which is a fraction of what you pay in developed countries like here in Canada. The challenge, though, with Ukraine is that this is still a country in transition. You do still have, unfortunately, corruption in the country that needs to be dealt with. And as a Canadian company, given that we, of course, need to abide by foreign best practices, which means that we can't bribe officials, nor do we even want to go down that road. It does mean that at times when we have challenges that we have to take them to court, and we have to take a bit more time than ideal to get them resolved.
Could you just touch on what you have for, as far as like an asset goes, what kind of grade you have and what you have there over in the ground?
What really makes this project special, Ray, is our close proximity again to the major infrastructure. We have about 850 million tons of iron ore at about a 31% head grade, very, very low strip ratio, only 0.6 to 1. But iron ore is not rare. What the big challenge with iron ore and with any bulk commodity, be it iron ore or coal as an example, is how do you move large volumes of material from where your mine is located to your customers? And that's where your proximity to major infrastructure is so key. So our project's only 2 kilometers from the government-owned railway, where we've confirmed capacity. The high voltage power lines run right beside that rail, with our tie-in point being about 30 kilometers away. We can access 5 ports on that rail, and there's a city of 750,000 people only 20 kilometers from our site.
What key catalysts do you see looking forward that would really be a game changer for your company?
There's 2 main things that investors need to look out for with Black Iron to really see the stock pop. The first one is we are looking to secure a offtake investor that will also contribute materially to the construction financing for the mine. And the second is we do require the surface rights for where the mine itself is located, plus some adjacent land, which is owned by Ukraine's federal government and being used by the Ministry of Defense to train people. So we only need a portion of that land, but those are really the two big things to look out for, Ray.
And as far as the cost of production, could you touch on any projections?
So Black Iron was recently ranked by CRU, which is a international marketing forecasting group, probably the highest respected globally, as the lowest operating cost adjusted for its final product iron content delivered to China, and the second lowest capital intensity in the world. So I should mention that we're making a 68% final grade product for about $31 a ton, and that includes your cost to mine, process, rail, and load a boat. So right now, when people talk about iron ore being $65 to $70 a ton, they're referring to iron ore with 62% content delivered to China. And every 1% you're above 62, you're currently getting around $5 to $6 per percent. So with our 68% product, which is 6% higher than the base, we'll get easily $30 to $35 higher than that reported number. So another way to look at it is $31 operating cost. When you make the adjustment for iron content, it's almost like producing the product for close to $0, as crazy as that might sound.
Wow. And as far as capital that's been spent on the company so far, I guess you guys have had quite a bit of, I guess, resources already poured into the company, which is really, to me, quite attractive looking at where the price is today, the share price.
Yeah, so we've invested about US 70 million in this project since inception, and that included purchasing the asset from East One Group. It's also two feasibility studies that we've done on the project, full pilot plant test work on the project, and also quite a bit of permitting work. And this is a project that, for your listeners who haven't followed the stories over the years, that back in 2014 was actually nearly fully funded for construction, where at the time we were looking to do a much larger, about 10 million ton a year, $1.1 billion plant. We had raised just shy of 800 million from the largest iron ore producer in Ukraine, about ninth largest in the world, a company called Metinvest. And we also had what was never disclosed, near finalized offtake agreement with a international trading company. So what we're doing now, though, Ray, is we don't need to build that large plant. We're going to start with a much smaller, about 4 million ton a year operation for 436 million. And if required, we could even scale down from there, given that, again, we have such close proximity to the major infrastructure.
And is there any other mines that you could even compare this to that exist, whether it be in the region or even worldwide?
Probably the best comparable to this would be some of the operations that were bought out of distress and restarted in terms of the capital to get the mine up and going. You know, a company like Champion, as an example, the cost to get our mine up and going is about the same as what they required to get up and going. But the big difference, again, is our operating cost. The best benchmark in that regard is a company called Ferrexpo, which is a Ukrainian iron ore miner that trades on the London Stock Exchange. And they have operating costs very, very similar to what we're having forecast in our studies. But as far as finding a mine that has this low capital intensity and low operating cost, again, this is ranked as the lowest undeveloped project in the world.
Is there anything else that you wanted to touch on with Black Iron?
I think it's a company right now that's trading at a very, very low share price, almost like an option on iron ore. And this is a company that, you know, if it really starts to take off, it's not a double or triple. This is a multiple time return. If you look at, say, Ferrexpo again, and you look at the market cap divided by the amount of reserves in the ground, you get a share price somewhere between $2.50 and $3 a ton. So we like to think of ourselves as sort of the new kid on the block, and that really is the benchmark that we're trying to move towards.
And have you had a lot of exposure, I guess, in terms of investor engagement? Have you been going to many trade shows or conferences?
We did some of that at the start of the year and really started to gather quite a bit of excitement, more so on the off-taker side. So right now we have 13 steel mills / trading houses under non-disclosure. A few of them even came to site over the summertime. And we're now getting very serious with a couple of those groups on commercial discussions. But unfortunately, it hasn't reflected yet in our share price. So I really think, Ray, that the market is looking for that concrete announcement that we do have a big household name back in the story to really get the price moving again.
All right. Okay, well, thanks so much for coming on. It's been a pleasure. And we'll definitely keep in touch, Matt.
Appreciate the time, Ray.
Thank you for tuning into Investment Research Radio. Don't forget to sign up for the regular show and stay informed at investmentresearchradio.com.